Yo, how much monthly income does my $1,000 dividend portfolio give off? Let's find out. The way I check this out is pretty simple. I go through all my recent notifications on the Robinhood app, and then I just come in here and total it all up in my lovely spreadsheet. All right, everything's all updated in the spreadsheet, which means it's time to go over our massive dividend profits. For one thing, I'm just satisfied that I have over $1,000 finally in here because that's just a fun milestone. I love it. So overall this month, if I'm reading straight from my laptop here with you, what you can see is the purchases I made this month were a healthy dose of SPYD, which is the SPDR Portfolio S&P 500 High Dividend ETF. Based on my own logic and everyone's comments, I feel like it's wiser for me to get into more ETFs and pick less stocks, because frankly, picking stocks is almost never a good idea. So I bought $161 worth of that, and then I bought one share of ARCC, which is Ares Capital. And so Ares is basically a financial company, a capital company, and what they seek to do is invest in companies that are a certain size and in certain industries. And so they're looking for healthcare services, software, consumer durables and apparel, energy, food and beverage, and retail. And I look at that and I go, okay, so they're targeting companies that are doing well in these areas that to me seem like they're going to do well. So it's worth an $18 risk, right? And the little stats on Robinhood, if we can trust them at all, say it's like a 10% yield, which I'm not going to count on, because frankly, I think that it's a little bit undervalued right now. So I think that yield's going to go down in the future. But for now, I feel like it's a pretty solid thing to invest in. Now, it is an individual stock. It's not an ETF like SPYD, but the fact is that they aren't pigeonholed into just one sector or one company. Even though they are one company, they're actually investing in a bunch of companies themselves. So I guess I'm rationalizing it like a little mini ETF. But now let's get on to the fun part, which is how much money I got in dividends. Total dividends I got this month are almost the exact same as last month, which is $5.64. Enough for a couple tacos on Taco Tuesday, not quite enough for a carne asada burrito, and we're way far away from race car funding, but we're getting closer. And based on what my spreadsheet math is telling me, that results in a period return for just this month of 0.54%. And if that was extrapolated out for the whole year, that would mean I was getting 6.51% return, which is still pretty darn great for just dividends. This is not counting any growth. This is not counting any prospects of future growth. So I think it's pretty good. Overall this year, I have contributed a total of $1,040 to this account. It's gotten a total of $26.52 in dividends. And that means that my overall return thus far, when we're only partway through the year, is 2.55%. And the reason why that number is so much lower than the previous one is that is the total amount that I've invested divided by the total dividends. And so it's just saying overall my yearly return thus far has been that low, but I haven't been investing for a full year yet. So what I want to see is after we've been doing this for a full year, a few months from now, basically in February, what does that total return look like? I'm guessing it's going to be somewhere closer to 7, 8, 9%, something like that, but we'll have to stay tuned and see. And then for reference, a handy dandy chart showing us the returns so far. Maybe it'll look better if I just screenshot that for you and put it up here. What I'm seeing so far is a pretty strong average, and this is a very short window of time because all we're talking about is a few months, but I think we're off to a good start. And the fact that everybody's opinion of the stock market right now is still a little bit shaky, the fact that these companies are still able to pay dividends, everything's happening the way it should, gives me a little bit of confidence. I think something that I want to clarify about dividend investing is that it's really not different than other kinds of stock market investing as long as we still have a long-term perspective. Now, if you're the guy who's out here trying to day trade, options trade, get all leveraged up to the hilt by using margin and bet it all on what Tesla's going to do this hour, that's an entirely different thing. You're borderline Las Vegas casino gambling. But if we're looking at dividend investing, dividend growth investing, overall the strategy for us as far as what the active role is that we play is really no different. What's the game? Make money at your job, live on a little bit of it, invest everything you can, particularly in probably the different order than that. Get the money, invest the money, live on the rest. Because if we can, setting up that automatic withdrawal to go ahead and go into our investment accounts creates that automatic system for us that we don't have to think about. Doesn't tax my mind. I don't have to make any decisions because the money is frankly being invested already for the bulk of our investments. This, granted with Robinhood, is something that I do specifically for us to make these videos and chat about it. But by and large, no matter what you're investing in, we're just trying to shovel as much money as we can into the investment account because the more we have, the more it grows, the more that compounds, and then things get really crazy when that compound interest curve goes. So the strategy's the same. And if you're like me and a lot of my friends and you go, gosh, I wish I could invest more, or like some people I know and you go, I wish I could invest at all, Well, then we've got one of two options. A, we get a bigger shovel. B, we consume less. For a lot of us, consuming less is really difficult because we kind of have like a set lifestyle that you can definitely do it. You can cancel services, cut back on going out, cut back on a lot of things, and probably free up 100, 200, maybe 300 bucks a month pretty easily doing that, which is a great start for your investing life. But getting a bigger shovel has a lot of perks. And what I mean by that is getting more pay for yourself. You can get really serious about your job, or you can go out and get a side job or a side hustle and use all of that money then to invest. And I feel like that's really powerful. But don't take that the wrong way because it's not the right path for everyone. If you're a single parent and you're just trying to make ends meet as it is and you're already running ragged, getting another job is probably not really an option. But for a lot of the people that I know who are young, maybe married, maybe not even married yet, they don't have any kids, they don't have much responsibility, the fact is you've got a lot of time in your life to turn up that needle. Is that the right phrase? Turn up the wick, turn up the dial? Work harder is what I'm saying. You can work 70, 80 hours a week for a few years here while you're young without responsibility, make a bunch of extra money, invest it all, and then get this massive jump on that time curve that's required to get that compound interest going. It's more important in your 20s to work harder and work more and invest more than it is to wait until you're making a bunch of money in your 40s or your 50s and then go, oh, well, now I can invest a substantial amount. Now I'll get started. No, you've missed out on the most important thing, which is that first 20 years of growth. Even if you're only investing 500 or $1,000 whenever you're young because you're working your tail off, you've got an extra job, everything is going towards investments, and then you have to taper that off once you get more responsibility, like you have kids, that's probably okay because the money's already there. It's deposited, it's working, it's growing. I think too often we're doing a mix of procrastination and trying to seek shortcuts then to justify our procrastination, and frankly, it just doesn't work. You can't will yourself into getting more returns or higher dividends. It's not going to happen. When we open ourselves up to more risk, then we end up getting burned, and the opposite of what we need ends up happening. Therefore, the old phrase rings true, which is time in the market always beats timing the market. The longest time period you can be investing is the most important thing for you to be thinking about. And this little dividend video is part of a much larger series where I'm reading multiple books about dividend investing. I'm doing research. I'm going to report back and make videos about that and what I learn and summarize those for you so it saves you time. Plus, track what I'm doing over the course of a year to dividend invest in this one dedicated account. So it's a little bit of kind of a fun journey to follow along with. Plus, it's an experiment. Plus, as I read these 3 or 4 books about dividend investing, hopefully it saves you some time and I can kind of summarize that for you. So stay tuned, and if you're not subscribed already, then do that now. It's totally for free. If you actually want to see the videos, you've got to hit the bell too, because YouTube has reworked how they do their algorithm to where if you're a subscriber, doesn't mean it's going to be showing you my video. So you really have to hit the bell. And it sort of pains me to say that, but that's the reality of what it means to be on social media nowadays. Also, if you're on Threads and you want to follow me there and see kind of my more day-to-day thoughts on investing and what that looks like, then go ahead and do that. I'm at Brendan Evan, and watch that space because there's some pretty exciting stuff coming up. I've been chatting with a few companies that have new products coming out that look really compelling, like the kind of stuff that I go, why haven't other companies been doing this long ago? Why haven't we had this kind of service available to us to use this so we can invest and grow our money easier and better? And it's only now just finally coming out. Sometimes that's how things work, right? Oh, and if this whole time you noticed that I had ketchup on my shirt, please forgive me. My son had ketchup all over his mouth and gave me a big hug. So, sweet old buddy. Now I gotta go wash this shirt. Till next time, I'm Brandon, and I'll see ya. Secret comment word is ketchup. Bye.